Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. The stock market today was fascinating. It opened up under pressure, but that dip got bought really quick. We're probably back to the flat line already. So I'd be cautious here, though. I would not be buying this dip yet. I will be buying the dip, but just not yet. I think this will take a week to play out, maybe 2 weeks, but nothing goes straight up. The stock market up 18 of the last 20 days, kept going higher and higher. Just got exhausted. Pullback's natural, and this is a natural pullback. But I don't think the pullback's done yet. Now, a lot of people just dove into the market this morning as soon as they saw it open down. They just started buying it up. They bought the dip. We're programmed to buy the dip. That's been working. It's going to continue to work. I just think that this dip is going to be a little bit deeper than people expect. So I'd use caution right here. Now, what I want to talk about today is inflation. Okay, inflation numbers came out, so it makes sense to talk about the wholesale price index, right? For October, up 8.6%. Now, 8.6%, that doesn't sound too terrible, Mike. Well, that's the record all-time high. It tied the record for the highest in the wholesale price index. Okay, but 8.6%. Now, last month in September, it was 7.5%. So the trajectory is going like this. The trajectory is going higher. It's not going down. It's not transitory. It's not going away anytime soon. We are taking off. We're not coming back in. Okay, now today we got the consumer inflation number. Now the consumer inflation number rose to 6.2% in October. 6.2%. This is just what the government's admitting to, right? Okay, but here's the thing. In September, it was only 5.4%. So once again, the trajectory is higher. It's not transitory. It's not going away. It's getting worse. It's going to start to get really ugly. Now, the reason for all this increase in inflation, of course, is the printing of money. Now, what's interesting, even though we're printing all this money, well, consumer household debt is also an upward trajectory. People are borrowing more. They have to borrow more because they have to pay for these higher prices. So they don't have a way to pay for them except for borrowing more debt. Now, the household debt rose by $286 billion to a record high of $15.24 trillion in household debt. So we got this debt spending. We got this inflation problem. So what do we do? What do we do? Well, I keep telling people, pounding the table. You need to get into gold. You need to get into silver. Now, I have the gold miner trade on. I own gold and silver. And these trades are starting to work. They're starting to work. Now, people hate the gold trade. I mean, gold is probably the most hated commodity, the most hated trade, especially by young people. Oh my goodness, and they're all making money on the cryptos, and that's great. Don't get me wrong. People think that I don't like Bitcoin because I like gold. These are two separate things, and there could be nothing farther from the truth. I'm a gambler. I'm a stock market trader. I will trade Bitcoin in and out of it. I will trade gold in and out of it. Look it. Right now, gold is a good buying opportunity. People think that it's a relic, that gold is dead. You hear that all the time. Gold is dead, Mike. It's a relic. It can be manipulated by the big banksters. You don't want to own this gold stuff. The federal government's going to confiscate it. Remember when they confiscated gold back in the Great Depression? Sure, they could try that again. I don't think they will, but they could. It's possible, right? Now here's my favorite comment is that only losers buy gold. Only losers. Well, okay, I started buying gold when it was about $300 an ounce, and well, it's up to about $18.50 right now. That's called. Now, that's not a losing trade in my opinion. A lot of people think that gold has done nothing in the last 10 years. They would be correct. Look, gold had this Big run-up. Okay, it's had a couple big run-ups. Now, back in the 70s, you could have bought, 1970, buy an ounce of gold for about $35. But 10 years later, it was trading at $800. Okay, that's a big run-up, right? Right? Okay, now what was it? Like 2000, you could buy an ounce of gold for $250. And by 2011, it hit an all-time high of $1,900. $1,900. Now, in 2011, that was $1,900. Now, people say, well, Mike, it's dead now. We got Bitcoin. We've replaced it, and for the last 10 years, Mike, it's done absolutely nothing. They would be correct, right? They would be correct because, in 2011, it was 1,900. 2021, we're at basically roughly the same price. It's done nothing. But in that time, what it did, it pulled back to 1,100, and now we're back in rally mode. We're back up to 1,850. I'm telling you, this is going to go much higher, in my opinion. Now, there is a setup here. There's a reason you want to own this relic, this gold, this hated commodity. Okay, and number one reason is the money printing, right? The money printers aren't going to stop. They're going to continue. We just announced the infrastructure bill. We got a spending bill. It's going to come to about $3 trillion for those two. Now, debt. We don't have the money to pay for these bills, so we're going to go farther into debt. Now, household debt, we already talked about that. It's on the rise. Household debt's on the rise. Okay, so debt is a second reason you want to buy gold. Debt is just exploding higher. Okay, trade deficits. We're setting record highs in trade deficits. Every month it's a new record high. The trade deficit is just increasing. It's going parabolic. Okay, now what really the reason you want to have gold right now is the negative interest rates. Negative interest rates. Okay, the government is telling you that we have negative interest rates, right? Okay, a 10-year bond. What does it pay? About 1.5%, let's say. But we got inflation, 6%. It just came out. They just announced it. It's at 6.2%. And now we got 1.5% we're paying on the bond. So basically, that's a 4.5% negative real rate of interest. This is an environment where gold is going to do extremely well. Now, people say, wait, not so fast, Mike, not so fast. Gold is going to go down when they raise interest rates to fight inflation. Well, number one, I don't think they're going to raise interest rates because they can't. They cannot. The reason they cannot is because the government would have to default on its loans. Well, they wouldn't default. We just print more and more money, and that debt would keep going up and up. Now, here's the thing. They're going to try to raise interest rates. But raising interest rates is actually positive for gold. It's counterintuitive. If you go back over the course of history, when they started to raise interest rates, gold went higher, and gold's going to continue to go higher. It's going higher now. It's going to continue to go higher. Okay, there's some ratios here I want to talk about. All right. So now the Dow Jones, let's just call it 36,000. Okay, an ounce of gold, we'll call it 1,800. Okay, that's a 20 to 1 ratio. It takes 20 ounces of gold to buy one share of the Dow Jones Industrial. Okay, so that's 20 to 1. What's normal? Normal? Oh, let's call it about 7 or 8. Okay, so just to get back to normal, gold is going to go higher. Our stock market is going to have a massive crash. But 20 to 1 means that gold is very cheap. All right, now you have a ratio between silver to gold. Silver trading roughly around $25, and gold, that's called 1,800. It's at 1,850. But the ratio is, what is that? About 8. It's about 80 to 1, 76 or something. Okay, so it's 76 to 1. Now, what's normal there? Well, somewhere between 15 and let's call it 20 to 1. Okay, so we're at 80 to 1 and to get down to 20 to 1. So silver is going to probably outperform gold, right? Well, I believe that. I believe that silver is the most underpriced commodity. Look at this, is trading for $25. Silver spot price, $25. Okay, now this is a silver eagle. You have to pay over spot for this. You got to pay about, the premiums are ridiculous right now. $7, let's call it. So this is, $32. Okay, so the premiums are really high on this stuff, but it's worth getting. I mean, people are going to be shocked at what prices this is going to get to. I mean, I don't even want to tell you what I think it can do. Do I think triple digits is in order? Oh, triple digits that's just going to be the start once we get to triple digits. I'm telling you, you will thank me. But this is just what I'm doing. Do your own research. You got to do what you do. I buy silver here. I buy gold here. I'm in the gold trade. I'm in the silver trade. I'm buying the miners, the GDX, the GDXJ. Now, today's probably not the day to buy because, silver's up 80 cents. I mean, gold's up $25. This is probably not the day to get into the trades. There will be pullbacks. There will be a lot of pullbacks. And nothing goes straight up. It just doesn't. It doesn't go straight up. It doesn't work that way, right? But there will be pullbacks. There will be probably a better day to buy than today. But you want to get some. You want to protect yourself. You do. Inflation is going to get ugly. It's going to get real ugly. Yes, they're going to try to raise interest rates, and that is not negative for gold. Everybody thinks that's negative. It's actually counterintuitive. The reason they're raising interest rates is because inflation's running away. Gold is the place to be. Silver is the place to be. Yes, I like other metals. I like platinum. I like copper. Those are going to do well too. You want to have the metals right now. That's just my opinion. And that's just what I'm doing. And I do back that up. I'm in the gold trade. Gold trade's doing really well for me right now. The GDX, the GDXJ doing really well for me right now. These are trades that you're not too late. These are just getting started. Now, over time, they're going to pull back and they're going to go higher. They're going to pull back, go higher. On the pullbacks, that's where I buy more. That's where I get in. And then when they explode higher, you take some off. You take some off. And then you wait for the next pullback. That's what a trader does. The trade is the gold trade, the silver trade. These are in an upward trajectory now. Okay, that's all I really wanted to talk today about. Protect yourself from this inflation. They'll tell you it's going to go away. It is not going to go away. I'm telling you, it's not going to disappear anytime soon. It's not transitory. It's been here. It's going to remain with us, but it's getting out of hand. I mean, they're admitting 6% on the consumer. They're admitting 8% on the producer price index. Look, I think the real rate of inflation is closer to 15% right now. 15%. You have to do something. You have to protect yourself. Get some gold. Get some silver. That's all I got today. I'm Tall Mike. You like this stuff? Give me that thumbs up. Hit that subscribe button so we can talk more again later in the week. Bye-bye now.